Let's talk. We're about to embark on a journey into the world of credit cards. It's a landscape filled with opportunities, but also potential pitfalls. So buckle up, because understanding credit is crucial in today's financial world. Credit cards, those little pieces of plastic or metal, seemingly insignificant, but they hold immense power. They seem like a ticket to anything you want. That new gadget, that dream vacation, or even just everyday essentials. It feels like free money, a convenient way to pay for things without immediately impacting your bank account. But that's where people get into trouble. That feeling of free money can be deceptive, leading to overspending and mounting debt. Before you jump in, before you swipe that card or click that purchase button, let's break down what you're really signing up for. Let's demystify the fine print and understand the implications of using credit. The world of credit can seem confusing, with its APRs, credit scores, and various terms and conditions. But it's not so scary once you know the basics. With a little knowledge and understanding, you can navigate the credit landscape with confidence. Think of this as your crash course, a comprehensive guide to understanding credit cards. We'll cover what a credit card is, its fundamental purpose and function. We'll explore how it's different from a debit card, highlighting the key distinctions and implications of each. And most importantly, how to use it to your advantage. How to leverage credit cards to achieve your financial goals. My goal? To empower you with the knowledge and tools you need to make informed decisions about credit. To help you make credit cards work for you, to transform them from a potential liability into a valuable asset, not against you. We want to help you avoid the pitfalls of debt and build a strong financial foundation. Used right, a credit card helps you unlock a world of financial opportunities. It helps you build credit history, a crucial factor in securing loans, mortgages, and even renting an apartment. It helps you unlock rewards, from cashback and travel points to exclusive discounts and perks. And set yourself up for big milestones, the kind of achievements that shape your life. Like a car, enabling you to commute to work, explore new places, and enjoy greater freedom. Or a home, providing you with stability, security, and a place to call your own. But if you're not careful, if you don't manage your credit responsibly, it can lead to stress and debt, a cycle that can be difficult to break free from. We're here to make sure that doesn't happen. We're your guides, your support system, in navigating the complexities of credit. So grab a seat, get comfortable, and prepare to learn. And let's dive into the world of credit cards. Let's unravel the mysteries and empower you with knowledge. By the end, you'll know how to use them, how to wield the power of credit responsibly and effectively, as a tool for building wealth, for creating a secure financial future for yourself and your loved ones, and securing your future, a future where you're in control of your finances, not the other way around. Ready? Let's do this. Let's unlock the secrets of credit and pave the way for a brighter financial future. Let's clear up the biggest confusion: credit cards versus debit cards. They look the same, but they work very differently. Debit cards pull money straight from your bank account. Spend $20, your balance drops by $20. Credit cards let you borrow money from the bank, buy something, and you owe the bank, not your account. With debit, you can't spend more than you have. With credit, you can spend up to your limit, even if you don't have the cash. That's flexibility, but also risk. It's easy to spend money you don't have. So why use credit? Rewards, building credit history, and extra protections. For now, remember, debit is your money, credit is the bank's money. This is the most important lesson in personal finance. Understand this and you'll avoid a world of financial pain. Use credit as a tool, not a trap. Let's keep going. Ready to take the plunge and get your first credit card? It's a big step towards financial independence, and it can open up a lot of opportunities down the road. But where do you even begin? Here's how it works, broken down into simple steps. We'll walk you through the entire process from application to responsible usage. First, you apply, usually online, which is the most convenient way to do it these days. This allows the bank to assess your creditworthiness and decide if you're trustworthy enough to handle credit responsibly. They need to make sure they're lending to someone who will pay them back. To do this, they'll check your income to see if you have the means to repay, and they'll also look at your credit history if you have one. This helps them understand your past borrowing behavior. No credit history? Don't worry. That's perfectly normal for your first card, and lenders understand that everyone has to start somewhere. That's why there are cards specifically made for students and beginners who are just starting out on their credit journey. These cards often have easier approval requirements. The application will ask for your personal info, like your address and social security number, and your income. It's crucial to be honest and accurate when filling it out. Any discrepancies can raise red flags. If you're approved, congratulations. You'll get a credit limit, which is the maximum amount you can charge to the card. This limit is often in the range of $500, $2,000 for first-time cardholders, and your new card will arrive in the mail within a week or two. If you're denied, don't panic or get discouraged. It happens. The bank is required to tell you exactly why your application was rejected. You might need to build some credit first. One way to do this is by becoming an authorized user on a parent's or trusted family member's card. This allows you to benefit from their good credit history. Another option is to get a secured card where you put down a cash deposit that serves as your credit limit. A secured card is a fantastic way to start building credit safely and responsibly, as it minimizes the risk for both you and the lender. Once your card finally arrives, be sure to activate it, usually online or by phone. After that, you're officially ready to start using it. But remember, your first card isn't about racking up debt or making big purchases. It's primarily about building good financial habits and establishing a positive credit history. Start small with manageable purchases, use it wisely by paying your bills on time and in full, and you'll set yourself up for long-term financial success and a great credit score. So now that you have your card, let's take a look at what happens when you actually use it to make a purchase. You've got your card right here in your hand, a powerful piece of plastic that represents your purchasing power. It's more than just a card. It's a key to accessing goods and services, both online and in the real world. So, you're standing at the checkout, ready to make a purchase. But now what actually happens when you use it? What's the magic behind that simple swipe or tap? Let's demystify the process and take a look under the hood. Tap your card at a store. A simple gesture, but it sets off a chain reaction. Instantly, your encrypted card info goes to the merchant's bank, also known as the acquiring bank. This bank handles the financial transactions for the store. From there, the transaction request is routed to the card network, a vast and secure infrastructure managed by companies like Visa or MasterCard. These networks act as intermediaries, ensuring smooth communication between banks. The card network then forwards the request to your bank, the issuing bank, the institution that actually issued you the credit card. Your bank then springs into action, quickly checking if you have enough available credit to cover the purchase. They also run fraud checks to ensure the transaction is legitimate. Based on these checks, your bank approves or declines the purchase. It's a split-second decision based on complex algorithms and your credit history. The approval or denial signal zips back through the network, traveling at lightning speed to the store's point-of-sale system in just seconds. You get your item, the cashier hands you the bag. But here's the interesting part. No money moves right away. Instead, it's essentially a promise from your bank to pay the store the amount of the purchase. It's like a digital IOU. At the end of the day, or sometimes after a few days, the store gets paid by their bank, minus a small transaction fee. That's precisely why some smaller shops or businesses have minimum purchase amounts for card use. They're trying to offset the fees they pay on every single transaction. For you, the customer, it's a seamless and convenient experience. You simply tap, take your stuff, and then worry about paying your bill later, usually at the end of the month. But behind the scenes, it's a complex and incredibly high-speed relay race between banks, payment networks, and sophisticated computer systems. So, what's the key takeaway from all of this? All you really need to remember is this. Every single purchase you make with your credit card is essentially a short-term loan that you are obligated to pay back at a later date. Use your credit card wisely, manage your spending responsibly, and you'll remain in control of your finances. Now, with that in mind, let's dive into the details of your monthly statement and understand how to read it effectively. Each month, you'll get a credit card statement. Don't ignore it. It shows your previous balance, payments, new purchases, interest, and your new balance. Check every transaction for mistakes or fraud. If you spot something wrong, contact your card company right away. Credit cards offer strong fraud protection. Pay attention to your payment due date, miss it, and you'll get hit with fees and a credit score drop. The closing date marks the end of that billing period. New purchases after that go on next month's bill. Your statement also shows how interest is calculated if you carry a balance. Only making minimum payments? It'll take ages to pay off and cost you a lot in interest. Always read your statement carefully. It's your financial report card. Next, let's break down the key terms you need to know. 4 terms you must know: Credit limit, billing cycle, minimum payment, and interest. Credit limit, the max you can borrow. Stay well below it, ideally under 30%, to protect your credit score. Billing cycle, usually 30 days. At the end, you get your statement. Grace period, pay your full balance before the due date and you pay no interest. Minimum payment, the smallest amount you can pay to avoid late fees. Only paying this is a trap. Interest piles up fast. Interest APR. If you don't pay in full, you'll be charged high interest, often 15-25% or more. Interest compounds, so debt grows quickly if you're not careful. The golden rule, pay your balance in full on time every month. Do that and you'll never pay a cent in interest. Credit cards can be free to use if you're disciplined. Understand these terms and you're ahead of the game. Now let's see why credit cards can actually be awesome. On to the good stuff. Used right, credit cards are powerful tools. Biggest benefit, building your credit history and score essential for loans, renting, and more. Responsible use is the fastest way to build a great score. Rewards are the fun part. Cash back, travel points, or miles for every dollar you spend. Some cards offer higher rewards in certain categories. Groceries, gas, travel. Over time, these perks add up to real money or free trips. Credit cards also offer strong fraud protection. If your card is stolen, you're not liable for charges. Many cards include extras like extended warranties, rental car insurance, and travel protections. Every purchase is tracked, making it easy to budget and spot spending patterns. Use your statement to see where your money goes and adjust your habits. Credit cards, when used wisely, make your financial life easier and more rewarding. But there are risks. Let's talk about those next. Now, the dangers, the biggest risk debt. It's easy to overspend and end up owing more than you can pay. High interest rates mean debt grows fast if you only make minimum payments. Miss a payment or max out your card, and your credit score takes a hit, sometimes for years. Fees add up, late fees, annual fees, cash advance fees, and foreign transaction fees. For your first card, look for one with no annual fee. The psychological risk easy credit can lead to instant gratification and bad habits. Treat your credit card like a debit card. Never charge more than you can pay off right away. This mindset is your best defense. Stay in control and you'll avoid the traps. Credit cards are tools, not toys. Use them wisely, and you'll be just fine. That's it. You've got the essentials. Credit cards aren't free money or evil. They're tools. Used wisely, they build your credit, earn rewards, and help you manage money. Pay your bill in full, on time, every month. Never spend more than you can afford. Monitor your statements and credit score. Start with a beginner card. Keep your limit low, and focus on good habits. The choices you make now shape your financial future. You're already ahead by learning how credit works. Be smart, be responsible, and start building your future today. Thanks for watching. See you in the next video.